Glad you've tuned in. This is the Retirement Education Hour. Hi, everyone. Megan Mozak. I'm back in the studio today with financial instructors Kirk Cassidy and Michael Mazarin. Kirk and Michael, they're both with the Retirement Education Foundation. Of course, this show brought to you by the foundation with the mission of helping you retire successfully and with confidence. And it does start with education. That's what we aim to do on the show each and every week. And we've got a great program lined up for you today. Throughout the show, you'll be hearing us talk about the foundation's courses on retirement planning. These are really like master's level courses, deep dive into all things retirement planning, held in your community at major colleges and universities. So be listening for how you can get registered so that you can attend and walk away with far more confidence into your retirement future. Now, we're here with Kirk and Michael, and I want to ask this question that's, I know, on your minds, the market volatility that we've recently seen. You say there are some lessons to be learned here. Tell us what you mean by that.
Well, I'm super excited about today's show, guys, because I feel like over the last decade or so, and with our 50-year-olds who we call the invincibles, right, at the top of their careers with never more savings in their retirement accounts, having the greatest decade in market history, and not a lot of examples of market volatility. And when we've had them, things have recovered so quickly. I just think everyone is a little, I know the research tells us people are, especially do-it-yourselfers, engineers, the CPAs, it's the same core group of people we know, are so overconfident, and then they get smacked in the face with a pretty historic market volatility. That was pretty intense after, what do we call the day, Michael?
Liberation Day.
After Liberation Day, we had a pretty intense market volatility. And I'm continuing to meet people in our classes that continue to make the same mistakes. And we've got to change. We've got to change our relationship with money. We got to change our behaviors. It's all unnecessary. The anxiety does not need to exist. What is happening and over any short-term market event that we have experienced over the last decade and a half should not change your spending patterns, your retirement decisions, your decisions in the middle of the volatility, who's being elected. None from an economic, financial perspective, these events that occur and will continue to occur throughout your retirement. This isn't something new. They're going to continue, and they're avoidable. The whole purpose of our class is to help you navigate the emotions and anxieties and then help you find the right teams to help you. Michael.
Well, this is where people struggle, is that a lot of people think that preparing for retirement is making sure they're listening to finance podcasts and reading articles and reading books and trying to stay ahead of what might happen in the stock markets. That's crazy. If anyone thinks that they're going to be spending their retirement trying to successfully navigate stuff like that, predict when these things might happen, trade around these things, they are setting themselves up for failure. People have got to figure out how to build a plan properly so that when these things happen that no one can predict when they're going to happen, no one can predict what's going to cause it, no one can predict when the market's going to recover, having a plan that can navigate that and allowing that person to not just have the plan, but also let the plan work. Because once these things happen, all the plans that people think they had before this all happened, the great quote, people have a plan until they get punched in the mouth. Everything's out the window when these events occur and they realize, oh no, the plan that I thought I had isn't really going to work for me.
And then you contribute all the noise that they're listening to, just like this show. I mean, the difference between our show is we are a national charity. We've taught over 10,000 individuals. We have hundreds of thousands of people consuming our content between radio, TV, white papers, webinars, the charity's websites. We're a charity. But with all the noise, everyone trying to sell you annuities, I mean, all the radio shows local in your market, there are annuity salespeople. It's very confusing. And it is the reason we host these 8-hour courses at major universities in your communities and area that are taught over 2 evenings and 1 full Saturday. All we ask is you make a $29 donation to charity. Before you do anything about retirement, please attend one of these 8-hour courses.
One of the things that people, we'll talk about today that don't really understand is if I just pause, if I pull my money out of the stock market and I miss, the market's down, things are choppy, things are unpredictable, they don't understand the damage they're doing to themselves because, and we'll talk about this today, some of the best days in the stock market come right around when the worst days occur. And when you miss those best days, you are damaging lifetimes worth of returns over the next 10, 20, 30 years.
Mike, I was listening, as I always do. I listen to the local financial services radio shows in the markets we're in. I'm always listening. I want to hear. Everyone now sounds like the charity because they've recognized the messaging we're utilizing. So now what's happening is people are hearing the message and they're not sure what to look for, right? And that's the purpose of the class, is so you don't get conned, so you don't get sold stuff because what I'm in PS, we are intentionally trying to push your buttons, Michael. We are trying to push people's buttons because you guys we call you the invincibles in your 50s. You are way overconfident. You think you got this figured out. There is no market research that's going to help you navigate market volatility over any extended period of time. You are going to fail that game. You're going to fail, and you won't spend any of your money in retirement, and you'll be afraid as you get older. You'll get more anxious when you approach retirement. You will shut down. You don't want to believe us, but we have taught a lot of you. And yes, all of you, engineers, accountants, doctors, executives, business owners, you are really smart people, we know. But we are all broken when it comes to the financial impact of our retirement dollars, our money. We're broken. We are broken with our own money. We are broken with taxes. We are broken when it comes to healthcare costs. We do not make good, rational decisions as we age and we become more vulnerable, and we have to pay ourselves. And they manipulate you on the radio shows and the TV shows and the articles. They're manipulating. They're trying to sell you annuities. Look, the whole purpose of our charity and today's show is going to help you avoid these mistakes and give you the data to prove to you can't market time and stock pick. We're going to give you the data, the lessons you should have learned from the most recent market volatility. But the most important thing is we're trying to convince you to attend one of our 8-hour courses that we're teaching at the university. We are a charity. We're going to give you objective information, helping you to find the right teams to help you and to know what are the critical levers that are going to drive success in retirement. So if you'd like to register for one of these classes, all you have to do is go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll return plenty more straight ahead with Kirk and Michael. You're listening to the Retirement Education Hour. And we're back. You're listening to the Retirement Education Hour. Glad you're along with us here. I'm joined by financial instructors Kirk Cassidy and Michael Mazzarant, both with the Retirement Education Foundation. We've been telling you about the Foundation's courses on retirement planning, and these are like master's level courses. We want you there. We want you in attendance, and they're held right near you at major colleges and universities, including the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, also the University of Missouri and Columbia College. Here's how to reserve your spot. Simply go to retirementplanningedu.org. That's retirementplanningedu.org. You can also call to register 800-240-8981. That's 240-8981. We're going to get back to our program here in a moment. Want to remind you that you can listen to this show or many, many others in our library. Download wherever you find your favorite podcasts. You can search for the name of our program, Retirement Education Hour. We've been asking the question, what have you learned from the recent volatility? You know, the volatility in the markets, Michael, Kirk, it's gotten a lot of people's attention. And I want to find out, when it comes to lessons learned, what's one of the big ones?
Well, so we should have learned this lesson, all of us. Everyone listening should have learned these lessons long ago. But for many reasons, I mean, part of it's ego, and part of it is you have been conditioned to believe things, is this idea that you can time a market and that it's rational and that there's data out there that can help you determine what you should and shouldn't be doing is a waste of time. It's a waste of energy. It's a waste of money by some of the people you've hired. No one can stock pick and no one can market time. The best days in the market are typically after the worst days. Statistically speaking, the best days in the market on a percentile basis is more likely to happen in bear markets than in bull markets.
Well, we have some numbers on that. So almost 80% of the best days over the past 20 years have occurred either during a bear market or in the first 2 months of a bull market, which is typically when people are still afraid of, oh my gosh, is this bear market over? Has the bull market started yet? So essentially, almost 80% of the best days occur when it is the scariest, when it is the hardest to not sell, to not panic.
Right.
And that's why most people miss it, is because they sold earlier because of the big down day or because of the bear market. They sold and they tell themselves, I'll get back in when, quote unquote, when things calm down.
You can't.
When things calm down, it's already too late. There was some really interesting data done about a month or two ago that I saw where they broke down when does the stock market recover versus the event that caused the drawdown in the first place. So with most recessions, when there's a recession and as a result businesses are having struggling earnings, the stock market begins to recover roughly 9 months before the earnings recover. So when the headlines are the worst, when the businesses are struggling the most, when the recession is the deepest, that's when the stock market begins to recover. Yeah. And everyone's too afraid to get back in because the economy is still struggling. There are still layoffs happening, and the market begins to recover. And everyone says, "Well, this is a bear market rally. This is going to roll over again," and it doesn't. That's the start of the new bull market, but people miss it because the dust hasn't quote unquote settled yet.
Well, they're listening to economists, and they're as correct as your weatherman. And I'm not picking on them in terms of predictions. Economists are brilliant. They're great at looking at data and give us trends and ideas. But from a prediction perspective, economists are horrible. Second is the Michigan number, the consumer sentiment number, is you can give the data. It's a joke. I mean, do the opposite. Whatever the consumer feels, invest the opposite. I'm not suggesting that, but that's what the data don't. I'll give you the hard numbers, and I'll show you how simple this is in a minute. But go ahead, Michael.
U of M does a study. It's the consumer confidence study, consumer sentiment study. And essentially, they've been tracking for a long, long time now how confident do U.S. consumers feel about the economy, their job, the financial environment. And historically speaking, every time we see a massive drop in consumer sentiment. So it's 2022, it's COVID, it's 2020, 2018, 2016, obviously the 2008 crash. Every time there is a massive drop in consumer confidence, the stock market's typically higher 12 months later. Because everyone is rushing for the exits and selling everything when their confidence is down, and they inevitably miss the rally.
So I'm going to throw a bunch of numbers here. So stick with me because you're all going to be very disappointed in yourselves. The financial service industry should be very disappointed in themselves. In my opinion, I think they sell from a investment management perspective, from a performance with stock pick and market timing, they are selling voodoo. It's nonsense. Nobody can do it. No one has ever done it. The research has always told us this. It's just a lie. It's really just a big, gigantic lie. Because all you had to do in 1980, if you took $100,000 in 1980 and you bought the S&P 500, just bought the index, just bought the S&P 500, your $100,000 would be worth $10.8 million by 2022. $10.8 million, Michael. Okay? Now, hear me. If you missed 5 of the best days from 1980 to 2022, you just missed 5 days, your $10.8 million turns into $6.7 million. If you missed 10 of the best days in those, 42 years, mm-hmm. your 10.8 million turns into 4.8 million. If you miss 30 days in 42 years, 32 of the best days in 42 years, your $10.8 million turns into $1.7 million. And if you miss 50 days in 42 years, 50 best days in 42 years, your $100,000 turns into $761,000. You can't stock pick and market time. You have no shot at this. If you took $1 million in 2000 and bought the S&P 500 right now, you'd have over $8 million. Right now, you'd have over $8 million. That's all you needed to do. Wasting your time choosing different funds, looking at net expense ratio, Morningstar studies, which is BS. Go look at the Morningstar study that was done in 2016. The star rating system is not an indicator of performance. I can tell you that. You guys, stop. Investing isn't what's going to drive performance in retirement. The investing part is the easiest. It is super simple. We will teach you in the class how to be able to take 7, 8, 9% withdrawal rates, not performance, taking income, and bulletproof your retirement from outliving your income. But it isn't how you invest. It is all about where do you take your income from during different market conditions. You have to know what to ask these people before you hire somebody. Attend one of our 8-hour classes. If you'd like to register, all we ask is a $29 donation to charity. Go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll be back right after this. We're glad you've tuned into the Retirement Education Hour. Megan Mozak alongside financial instructors Kirk Cassidy and Michael Mazarin. We're in the studio today talking about the recent volatility in the market and lessons that we all can learn. And Kirk and Michael say that we should have learned so that we can have a better shot at a successful retirement. And this really is about paying attention. We're pointing out some of these things so that you can have a successful retirement, so you can gain confidence. The other way you can do that, the radio show is great. We're giving you a lot of information here, but the way you can really go an even deeper level into this and gain more confidence and knowledge is by attending the Foundation's courses on retirement planning. Now, these are like master's level courses on retirement planning. We want to see you there in the classroom. They're held at major colleges and universities near you, including the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University, the University of Missouri, and Columbia College. Go online, check out those dates, the locations, the times, find one that works great for you, and then reserve your spot before they fill up. And they do fill up quickly. Go to retirementplanningedu.org. That's retirementplanningedu.org, or call 800-240-8981. That's 800-240-8981. Back to these lessons that we're learning right now with the recent market volatility. We hear a lot in the accumulation years as we're building our nest egg. Buy and hold, buy and hold. But don't things get a little more complicated as we move into retirement?
Megan, they do. And I'm glad you brought this up because we don't want to create confusion. Okay, so, and again, it's why our classes are 8 hours long. It's why the charity hosts these events, these classes at universities and colleges in your area. It's nuanced. But I would still tell you, from an investment perspective, from a core investing perspective, buy and hold, passive indexing is always going to win throughout your entire lifetime. Where things get different is more around the market timing of your income. It's where you're taking your income from, what sources, what places, when the market is down versus when the market is up. This is a core concept that is taught in our class. We have pivot accounts. We have 3 red, yellow, green zones that you construct your retirement based around. And the concepts are really that you're never, ever, ever, ever going to sell one of your investments in the market when the market is down. When your portfolio is down, you are not rebalancing. You're not taking income from. You are freezing. And therefore, you have to have pivot accounts and different structures of accounts to take your income from when we have times of market volatility, and then give your portfolios that went down time to recover. And it's not much time. I don't let any of these insurance sales people tell you you don't have time, because markets recover very rapidly, and they have for decades, and they will, and you're okay. And so one of my fears, Michael, as I pass this to you, is there is our industry, the financial service industry. It's one of the reasons why we volunteer for the charity. They are gotten so clever, Michael. They are marketing geniuses. There are some guys and gals on the radio and TV locally. These people are wicked smart, especially in sales and marketing. They are wicked, wicked smart. Even how they structure their entity and license their companies, and whether they're securities licensed or not, there's some real nuance going beyond the scene that no matter how smart you think you are, this is the first time you're ever going to plan for retirement. You have no experience at this. You have zero shot of you asking the right questions and miraculously coming with the conclusion. Someone has to create the transparency to show you what is going to drive success versus what's not. And one thing I will say to you guys, anyone that's trying to put 50, 60, 70% of your money in annuities, run. Anyone that says that is nonsense. That is nonsense. You can always drive performance in the market and be able to produce a better outcome. You just take a more advanced approach. And that's what we teach in the class. So the core, Michael, I almost called you Paul, sorry. The core principles of what a plan should look like and what's going to drive your success in retirement is what we're teaching in the class, so that when you go out and look for these teams, you don't get sold the really good sounding stuff, because everyone sounds like this now, is saying the same stuff now. How do you know?
Well, you know what's funny is that before people come to the class, one of the pieces of feedback we get when they're preparing for the class is, oh my gosh, is this class really going to be 8 hours long? Are you guys saying it's 8 hours, but it's really 5? No. The class is 8 hours long, and then that same person who was maybe complaining about the length before they showed up, they're leaving the class saying, I wish that was 10 hours. I wish that was, 2 8-hour sessions, because, oh my gosh, there's still so much more that I wanted to learn about. And really, it's interesting. People show up and they're excited in the first half hour, and then people sometimes deflate a little bit in that first half hour or so, because we walk through what a real retirement plan should look like. And there's also a sample on the website that people can check out. So we walk through what a real retirement plan should look like. It's not some nonsense dial. It's not the 4% rule. And so a lot of people who thought they had a plan.
It's not your roadmap to retirement with some software analysis.
It's not eMoney, Money Guide Pro, Right Capital, that nonsense. And people come to the class thinking that they're going to leave that class with confirmation that I'm already doing the right things. And in that first half hour, they realize, oh no, I am not doing the right things. And I've never seen this before. And there's so much more complexity to this than I realized. I'm kind of, and then throughout the rest of the class, we teach them all the things to be aware of. And so they, Dunning-Kruger, they hit that point, the amount of stupidity, they fall into the valley of despair. And then throughout the class, they go through the slope of enlightenment, if you've seen the Dunning-Kruger curve. But this is why it's so important that the class, really people understand what they're signing up for. It is a master's level class covering lots of topics and a lot of depth to help them better understand what to look for.
That's it. What to look for when you go to make these important decisions. First, and maybe we'll talk about it next time, you're not going to do this yourself. You're foolish to do it yourself. If you do it yourself, you're just going to spend a lot less income. Forget performance. Let's just take that out of the equation. You're going to spend less money. There's too much anxiety and fear as you age. Cognitively, things change. But you need to know how to ask the right questions and know what a plan really looks like and the levers that need to be included before you go sit down with any of these other people. Go to this class. It's education. Get this almost master's level education before you make any big decisions. Please, we beg you. Go to retirementplanningedu.org. That's retirementplanningedu.org. It's 2 4-hour evening courses totaling 8 hours, or one full Saturday course of 8 hours. Hope to see you there.
And we'll be back. There's plenty more Retirement Education Hour right after this. Glad you're along for the show today. This is the Retirement Education Hour. Great topic as we're diving into recent market volatility. What could this mean for you, your retirement, and what lessons can we all be learning from what we've seen in recent weeks? Kirk and Michael say there are a lot, and we've been talking through those. And all of this is designed to give you more education, more background, more information, and more confidence about your retirement. You can also do that by attending the Retirement Education Foundation's courses on retirement planning. Now, these courses are held right near you in your community at major colleges and universities. And those locations include the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses, Oakland University. Also on that list is the University of Missouri and Columbia College. Here's how you can reserve your spot at these courses. Go to the website, retirementplanningedu.org. That's retirementplanningedu.org, or call 800-240-8981. That's 800-240-8981. And keep in mind, you can always listen to this very program or many others in our library. You can download them wherever you find your favorite podcast. Be sure to search for the name of our show, Retirement Education Hour. Okay, there's more lessons to be learned here from all this market volatility. Kirk, Michael, what's another one?
Well, I really like this one. I was really excited about this segment when Paul put the show together. It says, focus on what you can control, not what you can't. And that can mean a lot of things related particularly to retirement. But one thing I can promise you, you got one of the most difficult things to do is filtering out the noise. The noise is us. We're the noise. Our radio show, all the radio shows, TV shows. The noise is your friends, your coworkers. Everyone's got an opinion on annuity. Everyone's got an opinion on Social Security. Everyone's got an opinion on when you should retire. Opinions about Medicare. Everyone's got an opinion, and there is a rule for everything. And what I could tell you is none of them are right. None of them are right for you. None of the rules are right for you. Now, you won't like this, and it's okay. You don't have to listen to us, but the rule for you is going to be specific to you for every one of those decisions, whether you should have annuities or not, when you should take Social Security. There is no, I should take it early, I should take it later. The calculator online isn't correct. They're not even accounting for taxes. They're not even doing the right calculations. There is no rule. There's not a rule that you have a 85% chance of outliving your money if you take the 4% rule. That rule is if you just have one portfolio that's 60-40. That rule is nonsense. All these rules are nonsense. Every one of you have different assets, different variables, different goals, different health situations, different benefits, more or less Social Security, more or no pension, lump sum choices. Every one of you are unique. Every single one. Okay, every single one. And that's the thing the class is going to teach you, is how do you make the decisions whether or not the team that is helping you is using a rule or customizing it to you. And you will know after almost this master's level course that's 8 hours long, taught at university, you're going to know whether or not someone is building a customized, individualized plan to optimize your retirement, or are they using general rules to maximize their profits. You will know that. I promise you. But the greatest challenge for all of you, is there is so much noise. There is radio shows, TV shows, articles. Morningstar has a retirement segment. Every finance podcast, everyone has an opinion and a thought of what you should do. And I could tell you, without someone spending I mean, you'll see it in the class. 30, 40, 50, 60 hours iterating. They will not know what to do for you. So without the 30, 40, 50 hours plus of iterating to maximize and create the greatest efficiencies for you, what you will end up with is a bunch of people telling you things that you want to hear, sounding like what we're saying, but you'll end up living on 4%. You'll end up working longer. You'll end up paying more taxes, and you'll have more anxiety as you age because you will not understand what and why the rules exist. You won't even understand them, and you think you will, but you won't, and that's what the point of the class is.
That's another thing. Early on in the class, we'll have some people raise their hands. Okay, so I heard you guys in the radio talking about the rule of the 4% rule is not the answer. So what's the answer? And people very often, and people chuckle early on, the answer to all these questions is it depends, and people don't like that answer. But throughout the class, people begin to understand better how all of these levers impact each other. Social Security is not just a Social Security question. It's a tax question. It's a surviving spouse question. Roth conversions is not just an RMD question. It's a Medicare bracket question. There are so many interconnected levers that once people begin to understand, well, hang on a second. My retirement date impacts my income amount. My income amount impacts Roth conversions. My Roth conversions impact RMDs. RMDs impact Social Security. Oh, it's all interconnected. And if you're living by these very simple rules of thumb, you are losing all the nuance that goes into those interconnected math problems. And that's when people begin to realize, okay, hang on a second. I'm in a gridlock. I can't answer any one of these questions. Retirement dates, income targets, tax brackets, Social Security. I can't answer any of these things on their own because they each impact each other. I need to answer all of them all at once by mapping this all out.
And there, unfortunately, Michael, it doesn't exist. Trust me, we are working on it in our private practice. We are a family office, a multifamily office for high net worth clients in our private practice. That's what we do. That has nothing to do with this show or this charity. But in that practice, we are trying to develop the AI, the technology to iterate for us instead of us spending 40, 50, 60 hours building plans. We are literally iterating to create the greatest efficiencies for many different things in your retirement while mitigating the risks of you outliving your money, a long-term care event, mitigating the risk of one spouse predeceasing the other, and what happens from a tax bracket for the surviving spouse. I heard another radio show, Financial Service, talking about that this weekend. They're not wrong on some of the things they're saying and talking about, but they're going to cookie cut it. And you got to avoid the cookie cutters of our industry who's worried about selling things and how many people they can meet with as opposed to really building you a comprehensive plan. You have to know what to look for. So that's why you need to attend one of these 8-hour courses that are taught at major universities and colleges in your area. And all we ask you to do is make a $29 donation to charity, and we will give you invaluable information that will change your retirement. I promise that. So if you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll be back. Plenty more Retirement Education Hour coming up. It is always a pleasure to be in the studio with these two financial instructors, Kirk Cassidy and Michael Mazarin. They're both with the Retirement Education Foundation. This show, of course, brought to you by that foundation. Their mission is to make sure you feel educated and in the know for all things retirement planning. A lot of moving parts, a lot of things to understand in order to have confidence when you walk into this next phase of life. But the foundation's up for the challenge. They want to see you at the courses that they hold at local colleges and universities. These are major educational facilities, institutions, and they have these courses at their locations, at their campuses. You can attend. They're very conveniently located near you. Here are those locations: the University of Michigan, Eastern Michigan University, Michigan State University, Novi and Troy campuses. Oakland University is on that list. Also, the University of Missouri and Columbia College. So reach out now, reserve your spot so that you can attend these courses. Go to retirementplanningedu.org. That's retirementplanningedu.org, or call 800-240-8981. That's 800-240-8981. We've been talking today about lessons that we can learn from the recent market volatility. Now, Kirk, I had to call you on this because before the break, at least I thought we were going to talk about control what you can control. But it sounded more to me like you were talking about how to filter out the noise. So I'm going to challenge you here. Can you tell us about this control issue?
Yeah, I might have messed that one up. Sorry, folks. I mean, it was a good message. I really enjoyed the last segment, and it was supposed to be the segment we were going to do next. And so I messed that one up. I apologize. Let's talk about things which you can control. Focus on that as opposed to things you can't control. And I do think people mix up what they really can control and what they can't control. So, Michael, one great example of this, and there's a hidden message here for us. It's a selfish message for the charity trying to push you guys to the class. If you're within 10 years of retirement or retired, you need to get to this class because what you can control is having a plan, having the right teams helping you. You can control knowing what you need to give you the retirement you want, which none of you have that answer. You can control when you should take income from which accounts when the market is up versus when the market is down. You can control those things. You can control, do you have, I already said that. Do you have what you need to give you what you want, which is probably the most important point. But you can control how your portfolio is designed. You can control that so you do not panic when we have things out of our control, like major market events, like being forced to retire. Here's a fun fact. Only 40% of you, it's not a fun fact, but it's a fun fact to know, is that only 40% of you only 40% of you will get to choose when you get to your retirement. And I know I'm stumbling a little bit, but Michael, it's because I don't know if I need to be more direct with people or more dramatic with people. There are so many things that are out of your control that you need to prepare now. I don't know what people are procrastinating for.
Well, I think a little bit is the fear of the unknown, that they don't really know when they're going to retire, how much they're going to spend, where they're going to pull the money from, but they kind of have a gist of what they would like for those things to work out, and so they assume that what they would like to happen will happen. You know, at the class in the past three months or so, we've met a lot of people at the class who have been recently let go from their jobs or are afraid of being let go from their job in the next 6 months or so. And these are engineers, they're executives, they're high-level people, and they're saying, listen, the writing's on the wall, we're expensive. All of us, all us late 50s, early 60s employees, we're expensive. They're trying to cut costs. Businesses are getting a little anxious about the economy, and they're the first people to go. And so if you have in your mind, I'll work until 62 or 65, first of all, why'd you pick that? People pick these ages based on milestones. 62 for Social Security, 65 for Medicare. Well, what if you already have enough to give you what you want? So first of all, why are you even picking those numbers?
No, Michael, I got to pay for private insurance. I can't afford that. They're going to leave the kids millions of dollars, but they can't afford the extra $20,000 a year to retire a couple years early. I mean, because they would leave a little less money to the kids.
So the number they picked in the first place, half the time isn't even the right number. But second of all of a sudden they think they're cruising in their job, and then they get tapped on the shoulder. It's time to go. Or whether it's job related or health related, whether it's your own health, taking care of a spouse's health, taking care of a parent's health, most people do not get to pick when they retire. And what happens if there's a recession, you lose the job, the market's down, your 401k, these perfect storms happen. When it rains, it pours. This stuff tends to happen. We saw it happen in 2021, 2022, when lump sum pensions were falling, the stock market crashed, and people who hung on because they thought they could work forever got torched.
Well, and really, Michael, fortunately, I shouldn't say that. Fortunately, a lot of them didn't lose their jobs because the 2022 market volatility recovered very quickly. Mm-hmm. Everything recovered quickly. We didn't end up in a recession. But if we would have ended up in a recession and we had the market event, and then you're one of the most expensive people employed in your 50s and 60s, You're gone. We know this. We've seen this before when we've had major recessions. You expensive people, no matter how valuable you are to your companies, are the ones that are going to be let go. And you're going to be let go when your portfolios are down significantly. And sometimes your lump sums may be down. So, which is totally, you could have controlled that. You just thought nothing bad could happen if you keep working. That's what a lot of you guys assume. But you think you have control of something that you don't have control of. What you have control of is figuring out, do I have what I need to give me what I want? When I should really retire? If something bad happens, where I'm going to take my income from? How much I can afford to take? That's the other part, Michael, and we're going to have to go to break here in a minute, but just understand coming to this class, the thing that we're going to teach you is most of you in your 60s can afford to take 7, 8, maybe even 9% withdrawal rates, especially married couples.
I'll repeat that, withdrawal rates.
Withdrawal, not performance, but that's income, how much you can take out. And as long as someone is iterating enough and creating the greatest efficiencies and mitigating all the risks that can happen to you, you can spend double what everyone else is telling you. But you're going to have to find the right teams to do that, and you got to know the right questions to ask, and you got to control the things you can control. And the thing you can control right now is getting educated, going to an almost master's level course in a university or a college, 8 hours long. And all that you have to do is make a $29 donation to charity to take control of those things. So if you'd like to attend, go to retirementplanningedu.org. That's retirementplanningedu.org.
And we'll be back with Kirk and Michael right after this. Glad to be here with financial instructors Kirk Cassidy, Michael Mazarin. They're both with the Retirement Education Foundation, and we sure are glad you're spending part of your day with us as we focus on helping you gain retirement planning confidence. That's what it's all about. That's what the Retirement Education Foundation focuses on, and they make it their goal in the courses they hold at major colleges and universities near you. These courses are designed just for you, and they are a deep dive, almost like a master's level course on retirement planning. We want to see you there. Here's how you can get registered. Go to retirementplanningedu.org. That's retirementplanningedu.org. If you're listening today, you've been thinking about retirement, or maybe you're newly retired and you want to gain more confidence, this is the greatest move you can make in that direction. So go ahead, get registered before those seats fill up. Go to retirementplanningedu.org or call 800-240-8981. Don't forget you can listen to our shows wherever you find your favorite podcasts by downloading anything from our library, this show or many, many others. Just search for the name of our program, Retirement Education Hour. We've been talking about lessons that you can learn from recent market volatility. There are a lot. We've been reviewing those today over the past hour with Kirk and Michael. But there is one thing, one really big lesson we all need to learn, and that has to do with planning for retirement, right?
It is. It's about planning. Everyone that's listened to our show and our podcasts around the country knows the last segment we talk about planning. And, it just dawned on me as we were about to do this segment. Again, as I continue to listen to other people in the financial service industry who have radio shows and TV shows, I think in the Michigan market, every single one of them are predominantly insurance salespeople. What I've learned is this concept of our last segment talking about the solution to this is planning, is that in every one of their shows, that's what we call a call to action, is the next 10 callers gets a free roadmap to retirement, a free plan. Everyone's talking planning now, right? And so I realized they all just copied our show and talked the last segment about planning, and that's okay. That's all right. I think beyond what we want you to recognize, and you can begin to learn what a real comprehensive plan looks like by going to the charity's website. You can just go watch a 30-minute webinar, and you'll get a concept, you'll get a feel, the general concept of what we are going to be teaching in the class. But most importantly is every plan isn't created equal. You can't mass produce these plans. You cannot do that. And that's what really bothers me when I listen to the shows that are on the radio and TV is that they're always telling call for your free roadmap, call to get your free tax analysis. It's like they are on, I don't know how many different radio shows. One of them is in multiple states with offices everywhere. They're on 15 different radio stations. How many mass-produced plans are they producing, right? So I hope you recognize a plan is not created equal. You have not seen, I'm confident that you're not seeing or you haven't seen and you don't have the type of planning that we are describing in these 8-hour classes. And really, that is the purpose of the class, is to help you to understand the key components that should be included in a plan. What are the variables that determine when you should pull different levers and go to different accounts? We call them pivot accounts to take income from depending on market conditions. How to maximize your income and minimize your taxes. It's really mapping out 30 years of income, doing the taxes for 30 years, having separate accounts to go to when we have market volatility so you don't have to reduce your income, to maximize performance and maximize income. And so I think we have to adjust our concept of, the solution to all of this is just planning, because everyone's now claiming they do planning, Michael.
Yeah, one quote that sticks with me all the time from the late, great Charlie Munger, show me the incentives, I'll show you the outcomes.
Nice.
And so all these people, just think about it sit down and think for 5 minutes. If they're offering the next 10 callers get a free roadmap, a free tax analysis, they're running a business. If they're offering a free service, there's a reason for it. They need to get paid somehow. And so what is their incentive to get the next 10 people to call? All of these different choices that everyone is faced with as they're retiring. You might not want to face these choices about when to retire, where to pull the money from, but you are going to be faced with them whether you want to or not. You need to understand the levers that are being pulled. Okay, they're telling me to start Social Security at 62. Why is that? Well, if you pull Social Security at 62, that means you're spending less money on the portfolio. And it just so happens that they're billing you based on the portfolio size. So if you're getting money from Social Security and need less money from your portfolio, that means the portfolio is larger. That means that their fees don't go down. So understanding the levers behind the advice that you're getting all starts with the education. Every single question has an answer. And your answer is unique to your neighbor's answer, is unique to your sibling's answer, is unique to your coworker's answer. Every single question has an answer, but it starts with the education to, when I pull these levers, how do they impact each other lever, and how does it impact my outcome?
And so that's why the answer to the last segment is really about the education. It's about the education to understand, are they really building you those comprehensive plans, or is it a software that is producing hundreds, if not thousands a year? I mean, I could tell you in our private practice, we are limited to the number of new clients we can take. In our private practice, we only help about 40% of the people that want our help, because we are spending 30, 40, 50, 60 hours building plans, and then we have to implement those individualized, customized plans. So we can't do and build hundreds of plans a year. We can't, that in our private practice, it can't be done. And so the purpose of the class, really that was the spirit of the class originally, is we are saying no to more people than we can say yes to in our private practice. So we wanted to help people that we couldn't help. That's originally where it came from. Have the knowledge and information to choose the right teams around, because it is very challenging. These are really good salespeople, and you don't have the experience to know if they're really providing the services they're promising.
And choosing the right or the wrong team can make or break your retirement.
That's it. That's it. So these classes are 8 hours in length, taught in 2 evenings or 1 full Saturday. We teach at most of the major universities and colleges in your area. We ask only for a $29 donation to charity for all of this knowledge and information that will change your retirement. I promise you, this class will change your retirement. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org.